What's the sweat on Social Security? Do we really have to risk losing a check on Social Security into the 2030s?
Well, we know that the trust fund is going to start running out of money, and therefore whoever is going to be president after this administration in 2028, he or she will have to figure out together in a bipartisan way what to do about it. You can, lengthen retirement age, you can raise payroll taxes, you can cut benefits, you can do a combination of all those things, but definitely we have to do something about it.
It just popped into my puny head. He wasn't picked by a task force for Chairman Warsh. What an oversight that was. Let's go to Nouriel Roubini from, I believe it's 4 years ago. No beef with getting older. In 1960, there were 5 active workers for every retired and disabled worker in these United States. Well, it's gone to 3 to 1 in 2009, headed towards 2 to 1 in 4 years. Instead of moving forward, we have slipped backward out of Fortune magazine in 2022. So the clock is ticking. I mean, we're moving on. Do you get the sense the politicians have any understanding of what's going to happen the first Wednesday of November in 2028 when we got to start really fixing this?
Well, the politicians always kick the can down the road until something becomes critical. They prefer to avoid it. And as we know, Social Security has been for a long time the third rail of American politics. So we'll have to deal with it like we did a few decades ago by creating a commission. At that time was run by Alan Greenspan, this time around somebody else, and they'll come with sensible ideas. We have to increase retirement age, we have to increase payroll taxes, or have the corporates that winners pay for the workers, or we'll have to cut some benefits. So any combination of those things is going to have to happen at some point down the line.
Eric Balchunas just pointed out to me that Senator Tim Keene, a Democrat from Virginia, and Senator Bill Cassidy, a Republican from Louisiana, have proposed a plan to save Social Security by borrowing $1.5 trillion to invest in the stock market, which would grow over 75 years to pay future benefits. Does that sound like something that could work, or is that kind of craziness?
Well, there were some ideas in the past about, unquote, privatizing Social Security, and in countries that have sovereign wealth funds because they're running fiscal surpluses and current account surpluses, that can build up net foreign assets like Norway does, like in the Gulf they do, to create something of a buffer for the future. The problem with the US is we run a fiscal deficit and a large current account deficit. So if you borrow more to invest in the stock market, you get that margin, some returns, because the returns on the stock market will be higher than what you pay on that borrowing, but it's a gimmick. At the end of the day, you have to do something else. That's not going to solve the problem. It's one step in one direction, but it's not going to be enough.
Okay, not the solution. In the meantime, inflation is getting in the way of everyone's best laid plans. You look at price increases in elderly health care, for instance, home health care. Because of immigration curbs, it's far outstripping the rise in college tuition. You can see there, although, of course, the absolute costs of each is comparing apples with oranges. Nouriel, are Gen Xers and millennials all going to work until we're 90 years old because we need to pay for 6-figure college tuition as well as 24/7 care for our parents?
Well, in principle, yes. The problem is going to be that with AI, eventually we're going to have long-term permanent tech unemployment. It's going to happen only slowly, but it's going to happen in the next 20 years. So even if you increase the retirement age, the problem is going to be a large chunk of the population is going to be replaced by AI and robots in the next 20, 25 years. So increasing the retirement age is not going to be a solution. It's true that with higher potential growth, debt ratio tend to fall because it's debt to GDP. So our fiscal condition is not as bad as it would be in a situation where growth is lower. Right. But at some point, we have to do something. But eventually, we need some form of universal basic income for everybody while they work and once they retire. And we're already on the way to that.
One evening at Davos, you and I sat at a bar, lovely old German bar. There was a public official down 3 seats down from us who didn't participate but listened in. And you framed out 07, 08, 09. Can you use 08, 09, or frankly, 2000, 2001 is an analog for this exuberance we have now in the stock market?
Well, I've become more optimist. Of course, there is frothiness, there'll be excesses, but I think that this AI revolution is the most important in human history in terms of tech innovation.
But you just told us we're going to lose all our jobs.
But suppose that growth goes from 2 to 4 by the end of the decade, and then it's going to be 6% by 2040 or 10% by 2050 because we're going to get to AGI. Then with growth doubling every 5 years at 10%, you can tax the winner, redistribute everybody to everybody else, and make everybody better off. So that's going to be effectively we'll have either ex post redistribution, that is universal basic income, or we'll have it ex ante. Ex ante means some form of socialism. Essentially, the government is going to take over some fraction of the big tech tech firms, as they're already willing to do, 5-10% of it. We create a sovereign fund that way, and we create a Marxian socialism. We're going already in that direction, effectively.
Okay, this is a very gloomy picture that you're painting here. That rings true with your Dr. Doom kind of.
No, it's not
nickname.
gloomy. It's optimist. With 10% growth and machines doing all the work, we don't need to work. It's only in the world of scarcity that the life dignity is based on
We got
the work.
to go to break. Stay around. Argentina or Spain?
I root for Argentina because there are many Italians in Argentina, and Italy did not qualify. But,
This will be good. We're going to talk about the old world with Nouriel Roubini when we.
I'm curious, Dr. Roubini, do you practice what you preach? Meaning, do you know all these economic theories inside and out? You understand why things happen the way they do. As an individual, do you manage your finances in a way that aligns with them? Or is there some element of irrational behavior in how you look at your own finances?
I'm reasonably rational. I've never traded in my life. I've never bought any individual security of any sort. I invest for the long term. I have a diversified portfolio, mostly of equities. If everything were to go in a severe recession, I'll move some of it into liquid assets and so on. But I think that most people, they're not sophisticated investors. They should just buy and hold until they retire rather than day trading or meme stock or crypto or other stuff that makes them lose money.
So you're very much a buy and hold guy.
Yeah,
like you don't
completely.
touch it at all.
Absolutely.
20 seconds are in my ear here. Talk crypto. The young want to know about crypto. You and I love crypto so much. 120 to 60. Is it going to 30?
Most likely, yes. Most likely, yes. I mean, really, listen, crypto is not a cryptocurrency. They're not a means of payment. They're not a unit of account. They're not a stable store of value. They're not a single numeraire. So calling them cryptocurrencies is actually a misnomer. Whatever they are, they're not really neither an asset or a currency. It's mostly a bubble. It's a Ponzi game
Paul
for most of
Krugman,
them.